Good morning, everyone. Thank you for joining me today as we take a closer look at what's happening in the world of cryptocurrency and why it matters right now. Over the past week, we've witnessed an impressive rally in the crypto markets. Bitcoin, the leading cryptocurrency, surged past the $104,000 mark, bringing it close to its all-time high. This is a remarkable milestone that's capturing the attention of investors, analysts, and the media alike. Ethereum also broke out of its recent consolidation phase, climbing from $1,800 to $2,500 in a sharp upward move. These gains are not isolated. They're part of a broader surge across the altcoin market, which has pushed the total cryptocurrency market capitalization to over $3.2 trillion. So what's behind this sudden upward momentum? There are three main catalysts at play this week, each contributing to the renewed bullish sentiment in crypto. Let's start with the first catalyst: trade talks between the United States and China. These discussions are taking place in Switzerland and are being closely monitored by financial markets around the globe. While the first round of talks ended without a major breakthrough or a public statement of agreement, President Donald Trump described them as showing great progress. On the other hand, China responded with a more reserved tone. State media emphasized that China will firmly oppose any proposals that threaten its core principles or global fairness. Although the two sides seem divided for now, the potential for progress in these negotiations is significant. Why? Because a resolution, or even just a meaningful de-escalation in trade tensions, could dramatically reduce the likelihood of a global economic downturn. In turn, that would ease investor fears and possibly create conditions for central banks, especially the U.S. Federal Reserve, to lower interest rates sooner than anticipated. This would be a very bullish scenario for risk assets like Bitcoin and altcoins. Moving on to the second catalyst: inflation data in the United States. This Wednesday, the U.S. Bureau of Labor Statistics will release the April Consumer Price Index, or CPI, report. This is a key metric that tracks changes in the prices consumers pay for goods and services. The consensus among economists is that the headline CPI likely rose from 2.4% in March to around 2.5% in April, while the core CPI, which excludes food and energy prices, probably remained at 2.8%. Why does this matter for crypto? Because inflation influences interest rates, and interest rates affect investor behavior across the entire financial system. If inflation is rising, central banks are more likely to keep rates high to control it. However, if inflation appears contained or slows down, that gives the Federal Reserve more flexibility to reduce rates, and lower rates tend to encourage more speculative investments like cryptocurrencies. Finally, the third major catalyst is market expectations for inflation going forward. Leading institutions like Goldman Sachs have publicly stated that they expect U.S. inflation to rise further, potentially reaching 3.8% by the end of the year. These forecasts play a powerful role in shaping investor sentiment. When inflation is expected to rise, many investors look to assets like Bitcoin, which is often seen as a hedge against currency devaluation and monetary expansion. So to summarize, the trade negotiations between the U.S. and China are creating cautious optimism. Inflation data to be released this week could influence Federal Reserve policy. Long-term inflation forecasts are pushing investors toward crypto as a store of value. Put together, these factors are creating a perfect storm of bullish sentiment in the cryptocurrency market. As always, markets can be volatile, and nothing is guaranteed. But right now, all eyes are on these key developments, and the crypto community is watching closely. Thank you for your attention, and stay tuned as we continue to monitor these unfolding events.